Hello, everyone. Good morning. It is Friday, June 12th, 2026. It's another beautiful day here in the Midwestern suburbs of Illinois. The sun is shining. The storm has passed over. It's absolutely fantastic out here. Filming another video. It appears that the AI mania is back in effect on Wall Street. We got the SpaceX IPO this morning. It was priced at about 30% over the estimate. We're going to take a look at the numbers here in a minute. The war situation in Iran has unexpectedly taken a turn for hopefully what is the better scenario, where the fighting stops and the traffic through the Strait of Hormuz resumes to somewhat normal. Now, what's actually happened is that Trump called off a bunch of strikes last night, and then the media pumped out tons of stories on peace negotiations are in their final stages, which we've heard multiple times before, which has never amounted to anything. But then Iran put out a little snippet where the same kind of dialogue was used, that we've never been closer to a deal. So either Iran is agreeing with this or they are playing along now for some other reason. There's a giant, huge shadow chess tournament going on, which involves, actual pieces, people, and resources being committed on either side. This is obviously not a game. This is real life, but it is being played like a strategic game. What's really interesting is that crude oil didn't get hit harder. It did get hit again. It's down at about 84 and a half right now. I'm surprised that it didn't get hit harder on this news. And probably the reason that it did not get hit harder on this news is the reality that we are missing billions of barrels of crude oil since the strait has been closed. The strait has been closed for over 100 days now. We're well past the Goldman Sachs estimate of 10 weeks. We're actually at about 13, 14 weeks now into this. And even though there is a negotiation that is supposedly taking place, there's been so much damage to the industry that even if things were called off and everything was going to go back to normal right now, we're months away from fixing the infrastructure, and we're 2 months away from the first shipments of crude oil that would be coming out of there, as well as all the other refined products that we're going to need in the future. The big one is fertilizer and, of course, liquefied natural gas. About 30% of the world supply of natural gas comes out of there as well. So it appears that everything is indeed awesome. And the AI mania has definitely gripped the market now. The NASDAQ is up. It is really volatile. We'll look at the price action here in a second. There's the 200-300 point swings up and down like butter. But it is up, and Wall Street is ecstatic about what's going on. There's optimism everywhere. It's, rainbows and unicorns and, puffy white clouds everywhere. Blue skies ahead, nothing can go wrong. Well, I hate to be the bearer of bad news once again, Mr. Doom and Gloom, but the consequences of what's already happened, we're not going to avoid them at all. We are not going to be able to circumvent the laws of physics and reality. We're going to hit the brick wall at full speed. Eventually, this oil shortage is going to manifest itself. Eventually, the gasoline shortage is going to hit. We are going to have a very serious problem here in the not too distant future. So it's Friday. I guess let's just party it up as much as possible while we still have time, because we have a few more weeks to play the role and avoid avoid reality. So let's just keep avoiding reality as much as possible until we actually hit the wall. So let's go through the headlines. Let's see what we got here. So Groundhog fixed the money printer yesterday just in time for the SpaceX IPO. And this morning, a massive space dust delivery has investors sniffing up more euphoria. Space dust arrives in truckloads. Markets inhale. Looks like big tech is high as a kite on AI mania once again. You see that the money printer is back online in full force. We got the it looks like we have a new model now. So not only did they fix it, we have a new model now, the 9000 XL Max Pro. Full euphoria mode. Looks like it's been engaged. There's tons of cash and tons of space dust. Wall Street is absolutely loving this. Meanwhile, the Cushing facility in Oklahoma is practically empty. So let's not, pay attention to that. We'll probably be able to print more crude oil, just like we print more cash out of thin air, right? The Truth Index fell to a record low at 2%. We have peace through optimism. Yes, the negotiations are going well according to both sides, but we have full kinetic military engagements while this is all going on. So I'm not too sure what's really happening here. AI says humans are not needed. All humans were fired to improve efficiency and reduce doubt. Support is 100% automated. AI's advice for today: buy more, buy now, don't ask any questions, thank you and goodbye. And of course, if it can be sniffed, it can be monetized. Wonderful. SpaceX shares set to open 29% above IPO price in blockbuster debut. Summary: SpaceX IPO shares to trade 29% higher than IPO price. Gray market trading signals 35% IPO pop. Poly market projects $174 opening, implying 29%. Okay, so it's going to open higher. We got it. It's going to open higher. Well, of course, it's going to open higher. It needs to open higher. Wall Street needs to unload all of its inventory. We need the highest price possible. This is an auction. We're auctioning it off to the highest bidder. The consumer has never been more powerful with the endless amounts of debt creation. They're allowed to buy anything and just borrow it from the future. We're about 40 trillion in debt. I mean, that's how we do things here in America. We borrow from the future, kick the can down the road, and avoid reality for another day. Let's summarize the article. The theme is not really SpaceX is a great company. The theme is speculation has reached a point where investors are bidding up an IPO using derivative markets before it even begins trading. So now you can bet on the derivative of the possibility of the price open. So you can bet on the option. You have an option to bet on if the option is going to price higher or just, it's really convoluted. It's absolutely out of control. We have derivatives upon derivatives upon derivatives upon derivatives where you can make a speculative side bet on speculative side bets. I don't know if you guys saw the Big Short, but there's a scene in the Big Short where they explain this perfectly. So imagine you're in a casino and you're the player playing blackjack, and there is a bet going on the main table, right? So there's a player, he's made a wager, and then everybody watching is now allowed to bet as well on the outcome of what that's going to happen. So that's a side bet now. So you have a main bet that's happening. So it's the player versus the house. He pushes his bet out there. Then, the people standing by or, at the other table or whatever it is, they're allowed to speculate on the outcome of that. And then there's other people that are allowed to speculate on the outcome of the side bet. So you just have all of these intertwined side bets together. Well, that's what this market has actually turned into with poly market and these other platforms. You can bet on the Iran war ceasefire if you want with this stuff. Or Kalshi, there's another one. There's derivatives now for absolutely everything. So the casino is loving this. The casino has never been busier. Key bullets. The IPO is already trading before it trades. Gray market trading is implying, 30, 35% first day pop. Prediction markets and perpetual futures, they use these in crypto, are already pricing in a major surge. The IPO is becoming a speculative event rather than a traditional valuation exercise. Well, of course, everything is a game now. Everything is financialized and tokenized. AI mania has expanded beyond AI. Investors are no longer just buying AI software companies. They are buying AI infrastructure, data centers, chips, space, satellites, anything connected to the future growth narrative. This is a full-blown mania right now. While big tech, who already has plenty of money, is now given a blank check to automate us all out of existence. That's what's going on here. So while you see the share prices continue to rise and while you watch your portfolio go up, if you have one, these are just digits on a screen. They're not really tied to anything even remotely rooted in reality, because the American dollar is the underlying unit of measurement, and the inflation is totally out of control. If it wasn't for the management of the bond market, nobody would frickin' buy these things. And the reason nobody would buy these things is because the inflation rate is so high that even if you bought the treasury bills, they're not going to cover the damage that you're going to take in the decrease of purchasing power via inflation. So the whole purpose of a bond is to protect the investor against inflation. I mean, that's one of the primary functions of bonds, right? Because when you have a bunch of cash, if the interest rate is nice and healthy, then you can hold on to that cash and it earns interest for you. If cash is not earning interest, then you want a more long dated security like a bond or something, right? So if the inflation is a couple of percentage points and cash is not yielding a lot, you can buy a bond, or you could buy a stock with a dividend. That's a form of a bond, but because the stock price goes up and down, there's volatility there. A bond doesn't have volatility. You buy the bond, and if you hold it to maturity, then you collect the bond premium, right? So if we have 2, 3, 4% inflation, and we have bonds that are yielding 5% or 6%, then obviously that's a great place to park your money. You can buy the bond, it'll pay you 5%, 6%, that outpaces inflation by a couple of points, right? Okay, no harm done. But now with inflation completely out of control, the real inflation is much higher than the CPI actually says it is. The CPI came out at like 4%, right? So if the CPI is 4% and then the PPI is 6%, then that means, real inflation could actually be double digits. My grocery bill is completely out of control. I don't know about yours, but mine's completely out of control. I'm paying 2 to 3 times as much for everything. So I think inflation is much higher. And if I go to buy bonds, the bonds aren't even yielding 6, 7, 8%. You got to go out pretty far to even get that. So until the bonds actually really outpace inflation, something is absolutely wrong here. Nobody would buy these bonds. Valuation is becoming secondary. This is a key theme of bubbles and manias. Bulls focus on Mars, Starlink, AI connectivity, defense contracts, and future growth. Bears focus on valuation. Some analysts argue the implied valuation makes even the most expensive AI stocks look conservative. Yeah, that's actually pretty accurate. Valuations are inflated to levels nobody has ever seen before. The markets want another lottery ticket. Retail demand is enormous. Orders repeatedly dwarf available shares. Traders are chasing the anticipated first-day move rather than long-term fundamentals. Total FOMO here. Everybody has to have this right now. It's a frenzy. A debt-fueled hopium hype frenzy. This is being viewed as a symbol of the cycle. We are in a phase right now. This phase is going to persist until it doesn't. I think we have a few more weeks to go in this phase. The logic is markets near highs, AI boom intact, huge IPO, massive retail demand, speculators expecting instant gains, instant gratification, of course. The appetite for risk is still alive and well. Well, as long as the debt and the credit keeps flowing, that's going to continue the euphoria. What investors see, AI, space, future growth, trillion-dollar companies, instant IPO gains. What gets ignored, energy constraints, geopolitical risk, inventory depletion, weak hiring trends, valuation concerns. Yep. The tale of two stories at the same time. Two stories being simultaneously told at the same time are mutually exclusive. One is true, the other is not. They cannot both be true at the same time. The first real breakthrough, Iran says deal closer than ever, an unexpected first, oil prices tumble. This is definitely a first. Washington has told us about 40 times now that we're close to a peace deal. Nothing ever came of it. So even if they do get a peace deal, their percentage hit rate for what they say is about 1 to 2%. That's why the truth index is at 2%. It fell to a record low. U.S. pulling large chunk of jets, refueling tankers from NATO defense, realigning further east. Oh, well, we're going to redirect some resources. That sounds like there's a negotiation really close to a peace deal, moving more military resources around. Gas prices fall for third straight week. This is definitely not exactly reflective of what is about to happen here. This trend can only last for so long. Let's see if there's anything else. University of Michigan sentiment bounces off record low in June. Inflation fears fade. Okay, sure. Let's check in with the price action. So we can see that the NASDAQ is definitely off of the low here. So we're about 2,500 points off of the low. That's a pretty good lift off of the low. The rally started at the beginning of the previous session where we were making a low and then we briefly went through that and then we turned around and went north and we were basically bid for the whole session. And then late in the day yesterday is when we got more announcements of the negotiations reaching the final stages of a framework for a memorandum of understanding that we might talk about ending the war. And that sent the NASDAQ up about 600 points really quick. If we look at the chart, where is my NASDAQ chart? Here we go. So this was the big rally in the afternoon. You can see that we just spiked higher and then held and then pushed higher. And we were lower overnight. Here's the low. So we went lower. You see we're at the bottom of this candle here. So we open up, we go lower, then we recover, we recapture the previous day's low, and then we're bid for the rest of the session. And we did a little whipsaw in the open, a little confusion, and then, you know, we ended higher, right? So we ended a lot higher on the session gradually, and we've been stuck on the high now because of the SpaceX IPO bid, as well as more optimism about the Iran war. So this is the perfect alignment of events for this Friday in the market, where the week was definitely going south, and now we are going right back to the all-time high. Looks like it definitely looks like a lot of the selling pressure has been absorbed. The narrative has completely changed. The volatility, is starting to subside. We will see how this plays out, but it definitely appears that the rally is back on and that the bulls are in control of the market once again. What's going to stop this thing? They're high as a kite on debt and AI mania. They're absolutely invincible. Crude oil, 84.75. Down a little bit. Not down a whole lot, but definitely down a little bit. 300-400 tick range. It got smoked from around 94 yesterday, definitely due to the Iran war news and the negotiations. Every time there's talk of negotiations, this thing gets slammed hard. Even though we're drawing down inventories at a record pace, this thing still continues to get sold. I guess the speculators just really don't want to be holding this if Washington is going to pump the rhetoric. And now they definitely don't want to be holding this now that Iran is chiming in. I definitely do think that Iran is playing along now with the narrative. For whatever reason, I'm not sure, but they are definitely not stupid, and they're definitely not helpless. Iran is a lot stronger than the Western media makes it out to be. We will see what happens in here next week. It's going to be very interesting. Rollover is in effect in the indexes, so we're going to have expiration soon. We're going to be rolling to the September contract. We're trading June right now, so that's going to happen. That's also a volatility influence here. Rollover. Market likes to swing a lot. We're doing a couple of 200 and 300 point swings in today's session. So although the market is bid, it is definitely very volatile still. So the bear may be lurking in the shadows. We will see how this all plays out. Until Monday, you guys take care. Enjoy the weekend off. I look forward to seeing everybody on the next video.